Oil prices are spiking, and these stocks could be next to rise if the Iran conflict continues to drive oil prices even higher. Thanks for joining us for another edition of 10 Stocks in 10 Minutes. Make sure to subscribe for all of our daily videos on MarketBeat. This week, we are looking at the 10 stocks most likely to benefit if oil continues to climb. These companies will likely see direct impacts to revenue, cash flow, and investor sentiment if the higher oil trend continues. We are starting at number 10 and working our way down to the stock with the most upside sensitivity to what's happening with oil right now. Let's get started right away with number 10. Enbridge, ticker symbol ENB. This is a pipeline company that moves oil all over North America. If oil stays high, this is not the name that suddenly takes off. But when crude oil holds these levels, it generally supports the infrastructure companies that move that oil around. You could put Enterprise Products, EPD, or Kinder Morgan, KMI, in the same category. This is your steady name, not the most sensitive, but if oil remains elevated, it could provide a more long-term bump in the stock. But it is still trading below analyst estimates with about a 20% upside on consensus. Moving on to number 9, ExxonMobil, ticker symbol XOM. This stock has been climbing since early January, up close to 30% over the last 3 months, even before this latest big spike in oil. Exxon is one of the most direct large-cap ties to crude prices. If oil holds these levels, that is a positive for Exxon. Higher crude generally means stronger results from its production business. Chevron, ticker CVX, belongs in the same conversation, but this name is not higher on the list for a reason. Exxon is a massive, diversified company. It does not tend to see the same types of sharp moves as some of the more oil-sensitive names we're going to be talking about on this list. If crude does stay elevated like it is right now, this is one of those first stocks that institutions go to play the moves in oil. But it's not the most explosive play on higher oil prices. All right, moving on to number 8 is EOG Resources. This is where we start getting more direct. EOG is a shale producer. Devon Energy, DVN, and Diamondback Energy, FANG, fit into the same category. These names all tend to respond more quickly than names like Exxon or Chevron. This stock has jumped about 16% over the last month and is still trading below consensus price targets. So if crude holds these levels, this is where the upside starts to get more noticeable. I think this is an interesting company with a lot of momentum right now, and it's a unique way to look at the potential impact of oil prices. So I'm going to add this one to my Bridget Buys watch list early on this list today. If you haven't checked out Bridget Buys watch list yet, make sure to scan the QR code or click the link in the description to check out some of the other stocks that made my watch list. Now back to this list. Coming in at number 7 is ConocoPhillips, ticker symbol COP. This one is different from Exxon and Chevron. ConocoPhillips mostly produces oil. It does not have the same refining business to balance things out. So when oil moves higher and stays there, this stock tends to move more directly with it. And we saw that in the stock price action this week with a more than 5% jump on Monday. This is where the list starts getting more tied to the price of oil itself. And number 6 is Occidental Petroleum, ticker symbol OXY. This is a more volatile oil name. When crude spikes on geopolitical tension, OXY tends to move harder than the bigger, more diversified names. If oil stays elevated because this Iran situation drags on, this is where you can start to see sharper upside. But that also works both ways. If crude pulls back, this one can give back gains very quickly. Like others on this list, Occidental is up more than 30% this year, with a steep climb in recent weeks, likely a reaction to the strong earnings report the company posted just last month. Number 5 is Schlumberger, ticker symbol SLB. This is where the story shifts. Schlumberger works with oil producers around the world, providing the services and technology needed to drill and develop wells. If oil spikes for a few days on Iran headlines, this does not change much. But if crude stays elevated, producers start increasing spending. And when drilling activity picks up, service companies like Schlumberger benefit. This is not always the first stock to move when oil jumps. We saw that this week when the stock had a pullback Tuesday. But if prices hold, this is where a second wave of momentum can start to build. In the same area, Halliburton, ticker symbol HAL, comes in at number 4. Halliburton is more heavily focused on North America, particularly U.S. shale. So, when U.S. producers respond to higher oil by adding rigs or expanding operations, this stock tends to react quickly, even more than Schlumberger, with more focus on domestic production. Like Schlumberger, it benefits from sustained high prices, not just a headline spike. So, when momentum builds in U.S. drilling, Halliburton can be one of the faster movers in the group. HAL also had a strong report in January and has been moving higher already in 2026. If you're looking for less movement and more steady stocks to look at during this latest round of volatility, though, check out this list of 5 stocks and 5 ETFs to help shield your portfolio from volatility. You can scan the QR code or check the link in the description to get the free report on MarketBeat.com after this video. All right, now we are on to our top 3. Valero Energy comes in at number 3, ticker symbol VLO. Refiners are a little different here. Higher oil does not automatically mean higher profits. What matters is the spread between the cost of crude and the price of gasoline and diesel. But in volatile, supply-driven markets like the one we're watching right now, that's when refiners like Valero can benefit quickly. Marathon Petroleum, ticker MPC, and Phillips 66, PSX, fit into the same group. If this Iran story keeps energy markets tight, refiners move up the list fast. And number 2 is Frontline, ticker symbol FRO. Now we are talking about transport. Frontline operates crude oil tankers. If tensions impact shipping routes or create uncertainty around global supply lines, freight rates can rise. And when tanker rates move, these stocks can move fast. It's something we saw in the sharp uptick with this stock already this week. Frontline has direct exposure to global crude shipping, and that makes it highly sensitive to prolonged disruption. And that takes us to number 1 on this list today. When oil prices rise because of geopolitical tension, everyone looks at producers first. But if shipping routes become a concern, the real volatility can show up in transport. If supply chains get rerouted and tanker availability gets tight, freight rates can move fast, and these stocks, again, can move even faster. The stock most directly tied to the shipping volatility is Scorpio Tankers, ticker symbol STNG. If this Iran situation keeps pressure on global oil flows, this is one of the most sensitive names on the board. I actually had a really in-depth conversation with a geopolitical expert to start the year. He talked a lot about oil prices in 2026 and where geopolitical tensions could impact this industry. Make sure to check out that full interview here. And if you like this format, 10 stocks in 10 minutes, we do a video like this every Wednesday. Make sure to subscribe so you can catch all of those videos. I'll also link to some of the previous videos in the description. Thanks for watching.